Finished my mountain retreat, but still have the alpaca. So this is Brian Lewis with MMT Investing, your spiritual guide to NVIDIA today. We're gonna take a look at this chart. NVIDIA, has been crazy. It's been running, like a god for well a while. Anyway, I'm gonna take a look at the market signals. NVIDIA is leading the whole tech sector, which this is a big deal and this is a critical spot. So let's take a look at what's up. So this chart technically is pretty simple. We had it's straight lines, which is actually pretty strange compared to most of the charts. But we just had a monster run. We started a bearish pattern to the downside, and this is not like a minor pop off of the bear trend. This is a monster run. So everyone's getting super bullish. I'm not one of these people. Like, I will show you where we are in the cycle and what is happening with this. But I think NVIDIA will be leading, well, either direction, basically. But let me show you what's happening on the general charts. So the magical chart. The euro dollar futures. So I do 1 minus euro dollar futures. It flips it upside down so that it matches the interest rates. But this is something that we have never had. I think the last time I looked at this chart was like 4 days ago, and it was super volatile. But this volatility has never happened in the history of this chart. The peak reversal has happened before. And the volatility like this, where the entire world, like bond trading market, has absolutely no idea what direction interest rates are going, this has never happened before. And the Fed's like rate hike that they just did happened in the middle of this volatility. The Fed rates were like around here somewhere, and they hiked them up to like here during this volatility with absolutely no clue where this is about to go. I will tell you right now where I think it's going to go. Boom, to this area, and it could do it in like 2 days. It can gap back down. This is a peak reversal. This is a peak reversal on the inflation and interest rates, and it's monster volatility. And I think there's about an 80% chance that this is gapping to the downside, and it could do that. It could do that on Monday. It could do that in like 3 months. So it's not. I think it's going to happen immediately, though. I think this is happening immediately. And the big deal is when this chart moves down, especially vertically, the stock market crashes. Sideways is bullish. Up is usually kind of sideways. But this entire rate hiking cycle, each crash that we've had in this cycle has been on one of these gapping up moves. Vertical moves are brutal for the stock market, even on the upside, but the downside moves are really brutal. So everyone that's saying like, oh, the Fed's going to pivot and like cut rates and that's going to help liquidity, like that's a load of bullshit. Down moves here, if the Fed pivots and cuts rates, is brutal for the stock market. And if we get down to zero interest rates, it's extra brutal. Like we could have 1, 2, 3 moves to the downside. Each one of these moves will be an absolute market crash. There's the potential of even going to negative interest rates, depending on your inflation outlook, whatever. But moving down to this level is nothing. Like that will happen in this cycle. It absolutely will happen. And it could happen starting on Monday. It could gap there, like Monday. In any case, that's where we are in the cycle. We're at the top of the interest rate cycle, and Fed pivots and down moves are not a good thing for the stock market. That's brutal for the stock market. And NVIDIA is leading tech, which is cool, but tech does not win on down moves, and NVIDIA is really high. So let me just cover like the positions that I have now. On this, I caught this like volatile up move here before it gapped to the upside. And I threw on a Tesla short and a Coinbase short, just because Tesla is bubbly and Coinbase has exposure to like everything that I would short. It has exposure to the banking crisis because they're going to cut off Bitcoin conversions. It has exposure to the general market. It has the meme stock whole situation, and the chart is just bearish on its own. And it's popped up away from the downtrend line. So anyway, Coinbase seemed like a pretty obvious short. And I wasn't actually thinking, like Tesla and Coinbase are the top two holdings in the ARK Invest fund, which exaggerates their movement. I wasn't even thinking about that when I shorted both of those together. But yeah, anyway, that's like the short that I put on Tesla and Coinbase was relative to this up move. And I was not expecting the interest rate cycle to just end here and switch. Like I just saw the volatility, and an up move is bad for the market, but that would mean interest rates are going up. But that's not what happened. It did a peak reversal into huge volatility, and this is indicating, well, and that obviously then like 5 banks collapsed. But this is indicating a down move in interest rates, which will be a Fed pivot and cutting rates. Everyone thinks that's increasing the money supply and somehow that's good for stocks. Absolutely not. That is absolutely wrong. What is good for stocks is when interest rates hit the bottom, wherever that is in that cycle. But like if it's around 0 again, when it hits bottom and goes sideways, that is when it's bullish. Right now we are at a peak. We're on the edge of a cliff, and every down move is going to be an absolute market crash from here. We'll probably have 3 legs of a market crash and possibly 4 if it goes negative. That's what we're looking at here. And NVIDIA, this video is about NVIDIA. NVIDIA has been leading the charge. And I mean, when it flips upside down, there's a super critical chart here that I'll show in a second, but I mean, the downside is this trend line, and NVIDIA flips and boom, back to this trend line is insane. That's 270 to 50. If it comes back to trend, it is an absolute monster crash, and that would just be 3 months, something like that, depending how quick it goes down. But I'm going to be watching NVIDIA, and if I see exhaustion signals on Monday, I'm going to put on a really big NVIDIA short, because this is the monster bubble stock right now, the AI bubble, whatever. But let me show, well, the S&P, and then the S&P versus the Nasdaq is the big deal. So the S&P is getting a breakout that is not convincing, whatever. The Nas is getting a breakout that looks good. So this is interesting, but the big thing that I want to show here is the Nasdaq versus the S&P, because we have, I mean, like a 20-year run of the Nasdaq outperforming the S&P since the financial crisis, and it's been kind of on this bubbly trend, and the actual long-term trend line, the actual long-term trend line is down here. And this is just the Nas versus the S&P. It doesn't say what's going up or down. It just says relative between them. But we broke the bubble trend, and now we're running up and back checking it. So I mean, running on top of this bubble trend has been whatever it is, 15, 20 years. This is the first time in 20 years we broke the trend, and now we're running up. And we're not only back checking the bubble trend, we're back checking this topping pattern. And so if this reverses here, that means the Nasdaq is going to be leading the charts down. And I mean, that's ahead of the S&P, which has the big banks. That's ahead of the IWM, which has the small banks and a bunch of meme stocks. Like if this reverses, that means Nas, the big tech stocks, and NVIDIA is the #1 stock right now, is going to be leading the down move back to trend here, and then there's a ton of support. But I mean, this is maybe the next 3 or 4 months. The Nas could be leading the down move, and so that's why I wanted to just like check in and show like exactly where we are on this, because that is going to catch everyone way off guard. Like, I mean, people are like, yeah, the banks are bearish, whatever, but we probably missed it. But like, the Nasdaq is safe, and NVIDIA is, you know, super bullish. But this could flip all of that upside down, and also this is like heading into inflationary signals for sure. So let me go back to back to this chart. So there's, I mean, the basic cycle, like sideways at the bottom is bullish. The rate hiking cycle is neutral or whatever. Usually at the top, you get more bullishness, but this was so steep and so high that the top was, well, it was this. We got this pullback during the top of the rate cycle. Like, that almost never happens. The top of the rate cycle is usually a topping pattern, which is up. This is a topping pattern that is down. And it finally stabilized. Just like this last little bit, it started stabilizing and going bullish, but now we got the peak reversal. So this is nasty. This is nasty. And when it goes down is not easy, but it will be, I mean, it's going to be monstrous. Like, we have two banks in Europe right now that are falling and getting bought out, but there's a list of 180 banks that are upside down at high risk. Maybe a short list of like 25 that are likely. I have a list of 6 or 7 specifically that I think are going to fall next. That doesn't include the ones in Europe. But yeah, this is where we are in the cycle. We're at the top of the interest rate cycle. And the down moves, let me just show you real quick. The down moves in the interest rate cycle are where the crashes happen. And I'm going to just show you the last few. This down move is the COVID crash. This down move is the 2018 crash, which was big. And then we had like 10 years of bullish sideways at the bottom. Bullish sideways at the bottom is big. This is the financial crisis. Lehman Brothers, leg 1, leg 2. Financial crisis. Down, down, down in the cycle. If you go back here, this is .com. And this was pretty much the whole .com bust here, and then there was a little follow through here on the down move. The down moves in the interest rate cycle are where the crashes happen, and we're hanging on the edge of this cliff right now. And if we go back here, this is the 90s recession, which was smaller. And the farther you go back, the crashes are a little bit smaller, the volatility was lower. But in any case, like, every time that you're at the top of the credit cycle, the government, the Fed will come out and be like, everything's fine, everything is fine, no need to worry about anything. And then you start the down cycle and it's wham, crash, wham, crash. And now, like, this rate hiking cycle is so high and we have no idea where the down move is. Like, they have been doing stress tests. Everyone's like, oh no, inflation is so high, and like the Fed is trying to fight inflation, blah, 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 blah. Like, the Fed is not trying to fight inflation right now. They did stimulus. It was enough extra cash, helicopter money to pop us out of the down cycle, which was fine. They're trying to keep the interest rates from going negative, but they are not trying to fight inflation. The stress tests that they are doing now, right now, at the top of this interest rate cycle, are for if we hit zero interest rates again. The tests that they are running are for this case down here by near zero again. This is what they're testing for. They're rate hiking into this, which they have room for, which is fine. But everyone's like freaking out that they raised the interest rates. Like, the Fed was here, they hiked to here. Like, that's totally normal. But if it look at this gap, if it gaps down back to here, like, that's gonna be like minus 1.5%. Like, that's gonna be like a 1.5 basis cut in interest rates, and that's going to be an emergency rate cut by like 1.5. People are like, oh no, they hiked 0.25, which was totally just where it is right now. Fine, but if it gaps down here, that's like that's 1.5 cut, and it's not going to be on schedule. When this drops, the Fed is not in control of that, and they will do an emergency rate cut. Like, that's what we're looking at right now. Let me show you also on the yield curve is here. Yeah. So this is a really big deal. This is a really big deal on the yield curve, as we're inverted, but we just had a big bull flag, and we just had a bull flag breakout. Bull flag breakout. When the yield curve goes from inverted back to steep and it breaks above this is recession territory. And we just did a big bull flag breakout to the upside. And it's super dangerous. We're teetering on the edge of recession right now. The unemployment rates are like at the very bottom, which sounds good, but that is not good. What happens before a recession is unemployment bottoms and then it shoots to the upside. So we're just at the bottom. We're on the edge of the cliff on an interest rate cycle. We have the yield curve inverted and breaking back up. So this is leading straight into actual recession territory. The COVID was a super weird thing, but yeah. Anyway, that's where we are. That's what the cycle looks like, and that's what happens when you hit like the down cycle. When it starts, it can be big, but usually the first down move in the down cycle is not that crazy. The second one is bigger, and if there's a third or a fourth one, they're even bigger. So that's just where we are in the cycle, and you can figure out, you know, how to try to position for that. But not financial advice as always. But yeah, I had the like the Tesla and the Bitcoin shorts on whatever it was, like 2.5 weeks ago, and it started getting volatile. And I just added NVIDIA shorts and US oil. So when you're running into a recession, oil just tanks like through the whole recession. And I've done a whole video on shorting oil before. But I mean, oil has where is it, like 70, kind of the bottom trend is 30 something. So like oil could chop in half, whatever, maybe over the next year or something, which doesn't seem like a huge important trade. But if you do long-term puts on UCO, that specific, it's an ETN, not an ETF, and it rebalances daily, and it's also like a 3x, and it also has risk of contagion. So when you're shorting it, if oil is going down, you have all three of those factors just adding, like multiplying the down move. Anyway, I've done a video on UCO specifically, but that is a big deal, and probably oil wouldn't just like gap to the downside. It sort of did back here in COVID. But anyway, that's like an oil short idea. NVIDIA is the biggest thing in the whole tech bubble right now. So that's a big deal. Tesla and Coinbase, I've already showed. Let me put the log back on. But yeah, Coinbase is just on a downtrend, and it's exposed to pretty much every kind of downside you can have. Tesla is just the generic, big meme stock bubble. And yeah, that should come back to trend here too as well. Although there's like a little bit of support here. Anyway, those are my main short positions. I need to do a bunch of videos covering all the banks that are at risk, I guess. Maybe I'll do like a series of short videos to cover all the banks. But for me right now, Ally is the #1 bank at risk. And this is because two things. One, it's really crypto friendly, and the crypto banks have gotten smashed really hard. And there's a theory that they're trying to get crypto out of the US banking system during this crash. And they're also trying to take smaller banks and consolidate them into the bigger banks, which we see happening in Europe. Not even small banks, they're just consolidating the banking system. I mean, Credit Suisse is huge. Deutsche Bank is looking like it's going to be bought out. But as far as American banks go, there's like thousands of banks, and there's hundreds at risk right now, and all of those, all of those 200 banks could collapse and get bought out here. But Ally has two things that make it a bigger deal than most of them. One, they're crypto friendly, and so if there is a specific crypto crackdown happening. That's an added risk factor, but also their amount of deposits that are over the FDIC insurance limit make them highly likely for a bank run. I mean, they have, I think it's the, I mean, like SVB had a huge amount of deposits over that limit, but the banks that haven't crashed yet, I think Ally is number one in deposits over the insurance limit. So if this bank gets at risk, people are going to be taking their money out, and this is the highest risk of a bank run, I think. Their balance sheet is not the ugliest balance sheet, but their risk of a bank run, I think, is the highest. But in any case, that's Ally, and I don't know. I could probably just cut this video. I mean, Bitcoin's pretty interesting. I mean, Bitcoin's done this wedge breakout, which is usually bullish, but it's like right into this, interest rate down cycle. So it's like peaking right here, like diamond top reversal style. I have the downtrend set up, but I also have the long-term bullish. It's above the long-term bullish level here. So Bitcoin's super interesting. Anyway, that's just like a check-in on the cycle pretty much and what's leading and what could flip. Nasdaq versus S&P is back-checking the trend and back-checking the topping area. And when that comes down, NVIDIA and everything else in the Nas, Tesla, Microsoft, Apple, can be leading the down move here. And I mean, probably just for a few months, and there's tons of support. But if it flips over, if the interest rates start coming down, that is not bullish, and people are going to get caught off guard when the Nasdaq is leading the down moves. So anyway, that was the idea. That was the idea that I had for just now. NVIDIA. I'm going to be watching that. I have a small short on NVIDIA, but tomorrow, or not tomorrow, Monday, I'm probably going to throw a big short on this one just because the downside is so huge. And yeah, probably like a 6-month put. I don't know. It doesn't really matter how close to the money, I guess. But anyway, that's what I'm thinking. That's what I'm thinking. The big, the big AI short, just for like a couple of months. That's not all that dramatic. It's just like the beginning of the down move if this flips over. But I'll keep tracking this and trying to figure out if we're gonna make down moves, what's gonna lead those down moves. Because I mean, obviously the banks are the thing that's failing now, but they've already done a big down move. Like this is something that's up with a lot of downside potential here. Yeah. All right. That's it. So yeah, happy trading. And I think I'll just do like a whole series of all the banks that are about to fail and how to play that. So enjoy. Have a good weekend. Cheers from Lima.